And on today's show, our key person in buy-sell disability arrangements. Part 4 of this week's series on Disability Insurance Awareness Month for 2014 with disability expert Tim Kukieza. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician in Insuring. Let's get down to business. Well, welcome to day 4.
Thank you, Steve.
Tim, 4 days of DI. Wow. Hi, Mr. Mortality. I have to listen to Mr. Morbidity, right? Wow. I want to talk about, we kind of touched on this on yesterday's show. I want to talk a little bit about contribution protection. You know, I'm sitting a 401k, defined benefit plans. Yeah. And I'm disabled. I now can't contribute to my 401k. I have bills to pay. That's the least of it. You know, that's not going to be on my mind.
Yep.
I did not realize that the disability carriers, I always thought it was based on, you know, here's your W-2, here's your income with your bonus and everything else. There's your number.
Yep.
But you're saying not only, and I want to make sure I got this right, they're not only going to calculate on that number, that's my income, and I can protect separate from that my contributions to my defined benefit or defined contribution plan. Did I get that right?
Yeah, you did. And when you look at today's environment, you know, people are worried about retirement, okay? And people are putting money aside for retirement the best that they can. But if you become disabled, if you're doing that, let's say through your 401k person, or if you're a business owner and you're doing that somewhere outside of the 401k, however you're doing that, typically if you become disabled, yeah, the disability policy is going to help you replace your income, but how now are you putting into that retirement fund? There's a couple of the carriers out there that will not only provide you a monthly disability benefit at time of disability, but they'll continue to put money into not your retirement fund specifically, but a separate account that they house themselves, but it's basically doing exactly that. You're still contributing, or they're contributing for you at time of disability into a retirement fund so that your contributions continue even while disabled, and when you retire, then you're able to tap into that fund specifically.
If they're setting that money aside, is that a taxable event to me?
It is not in that situation. Again, that's a great question, but if they're going to put $1,000 a month into your retirement contribution, they're doing that. Now, as you take that out, and again, I'm not a tax advisor or something like that, but along those lines, as you take it out, it's going to be taxable, but they're putting that $1,000 in for your retirement. There's nothing that you're paying taxes on at that point in time, and they're continuing to fund that for you.
So just to redux, I'm going to get my full disability based on my wages and my bonus, whatever my all-in compensation is.
Correct.
Separate from, and I've been contributing all along the line. They're going to look at that, defined contribution plan like a 401k, and they're going to pick that up on top of it. I think most advisors, I think they don't know this.
One thing that I will mention is there's a limit in terms of what they'll put in for you, okay? So if you're on the high end of things and you're putting a lot of money in there, they'll still limit what you can put in. And actually, some of the carriers, no matter what you're putting in, let's say it's a smaller amount, some of the carriers will actually put in more than what you were putting in.
Well, wait a minute, how can that be true?
If you choose to buy the benefit amount that's even higher than what you're putting into it, let's say you're putting in $500 a month as an example, you can actually buy a benefit for $1,000 a month.
Even though you're only contributing $500?
Exactly correct.
That I hate to say, you just stumped the savant. I did not know you could do that. Well, let's kind of start moving slowly here in this last segment, because I'm going to talk about it heavy in the next segment. We're talking about always buy-sell arrangements. Now, I've been doing, and I have to say this, buy-sell arrangements, I'm guilty as most of our advisors, we're walking in there covering the life and death benefit issues. That's my sin, it's my omission, I fully admit it. We need to start putting this on the table, because I saw some statistics about actual disability arrangements that have gone awry because I didn't have this online. I had the death benefit scenario covered. I didn't cover the disability. Give me a little introduction, then we'll move to the second segment, and we're going to talk about this all that time.
Yeah, it's not unusual for somebody to overlook that, just so you know. So what you see in that situation is statistically, the clients are more likely to become disabled during their working years, okay, versus dying during their working years. And so the disability is going to be an event that is likely to occur, and a lot of agents aren't paying attention to what happens if their client becomes disabled during their working years. How do they transition the company at that point in time? Or even if there is an agreement, how do we fund that agreement at that point in time?
We come back from the break, we're going to talk about this, because I think this is a whole new area to get inside employers and really talk about disability buyout. Because I have noticed the generational differences. There's people that are 60 years old and they have a 40-year-old partner. This is a major issue. When we come back from the break, we're going to talk about it. Back in the day, life insurance professionals were called field underwriters. Then, carriers trained their field force in the basics of life insurance underwriting. Today, the insurance industry doesn't educate the agent population as they once did. But now you can have the Informed Risk Guide at your fingertips so you can illustrate a reasonable rate class for your life insurance prospects. Just request your copy of the Informed Risk Guide at downtobusiness.ashbrokerage.com. It's free from Ash Brokerage, the practice enhancement company. Well, welcome back to the second segment. We're with Tim Kukieza. And Tim, I have to say, on disability, you are the man. And I want to ask you about this whole issue of buy-sell arrangements. Again, I've confessed my mortality, upbringing. I've been covering death benefit all day long. I want to cover disability because I've noticed that a lot of the actual arrangements in business owners, really, this is where it really happens. The person, one of my seniors my senior partner, who's older than I am, gets disabled. He goes off disability. I still have to pay him.
Yeah.
I'm short. He doesn't carry his weight. I'm now carrying his weight and I'm paying him.
Right.
And everybody keeps talking about disability at the life, and I don't want to diminish that or marginalize it at all, but we're not adding disability to it. Talk about this because I think that's where the game is being played.
And I will say that over the last number of months, we've seen an uptick in our illustration activity for buy-sell. So that's a great thing. But still, it's tremendously low compared to the life insurance side of things. So with the disability buy-sell, as I mentioned earlier, there's a much more likelihood of somebody becoming disabled during those working years. And you're very straightforward in the show, and I will say that from a buy-sell standpoint, there's not a lot of sizzle that you can have with a disability buy-sell. Like on the life insurance side of things, you've got cash value, you've got handcuffs and things like that. The disability product's pretty straightforward, but it's a situation, as you said, okay, you or I are in business together, I become disabled, we have the agreement that says after a year, Steve, you have to buy me out because I'm no longer a contributing part of the business, but how are you funding that buyout? Where are you coming up with the money to take my $1 million out of this business? Are you going to have to use cash flow? Are you going to have to go to the bank to get a loan? Are they going to give you that loan knowing that I'm disabled in that situation? A line of credit, how's that going to happen? And if you have the disability buy-sell at that point in time, then the carrier's helping you fund that buyout.
To me, I think this is one of the most neglected areas, I have to say, and as many of you know, I'm a contributing author to Backroom Technician. There's a whole section on disability buyout there that's excellent. If you say, Steve, I'd love to see it, just write me at steve.savant@ashbrokerage.com and I'll send it to you. You'll be enjoying it. And by the way, don't forget, they give a 30-day free trial offer. You can get on Backroom Technician, see for yourself, and drive it. It's great. The reason I bring up this whole idea of buy-sell arrangements is because we have a lot of people that are into business succession, and I'm kind of miffed because they say they're business succession experts and they never talk about DI.
Yeah. Well, I mean, when you look at a business succession, you have to look at the possibility of one of those business owners becoming disabled. Now, if you have, and in a lot of situations, you don't even have the document that shows them what's going to happen at time of disability. So forget about even funding the disability side of things. We're seeing more and more instances where you don't even have the language that talks about, well, if I do become disabled, how long do I have to wait before we start the buyout? What's the buyout going to entail? Is it going to entail a lump sum, you buying me out, or is it going to be a 5-year buyout? The advantage of getting involved with the disability company is when we can run some illustrations, we can show you the high-end price-wise. It shows you a 1-year wait with a lump sum, okay? And then we can show you the low-end price-wise. It shows you a 2-year wait with a 5-year buyout. Now, when you look at the premium, now maybe you can help your client design their actual document that says, here's how this is going to work, because now I know I can fund it, and here's what it's going to cost me to fund.
So if I heard you right, you're doing bookend quotes, basically.
Exactly.
So here's the top-end Cadillac version of this.
That's right.
And this is my Chevrolet.
That's right.
Before we leave this segment, policy loan, or loans for the business. I have a business loan I've taken out with my partner. Can I indemnify my loan section of that?
From a disability standpoint, there may be some opportunity for that, but we'd have to look outside of traditional carriers in that situation. We'd have to see how that loan is structured and where it's going to set up, and if I become disabled, what are the ramifications associated with that? Typically, we may have to go to our Lloyd's of London carrier, who we use as Peterson International, to look possibly at something like that, but you're not going to necessarily see that from a traditional carrier.
And I like the aspect that we have access to Lloyd's of London for the anomalies. DIs, and we have plenty of them. So sometimes you say, well, I know traditional DI doesn't do that. Well, okay, fair enough. But we have players out in the marketplace that we have strategic alliances with that could actually bring some of these things to bear. Well, that's all the time we have for today's show. Remember, before moving forward with any of the ideas you hear on our show, always consult your tax advisor, legal counsel, or your broker-dealer compliance officer. Missed an episode? Just hop out to our site at downtobusiness.ashbrokerage.com. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. See you.